Good evening, everybody. Welcome to the Honeymoon Traders. This is the highlights version of our video. It is 4/2/2020, and disclosure: we are not professional traders. We don't recommend this to anybody, and this is for amusement purposes only. And trade at your own risk.
There you go. Hi there, everyone.
All right, babe. We're doing this is the highlights reel, okay? And are we into?
You good?
Yeah, I'm waiting for my screen to come back. Why does this happen to me all the time? All right, so let's get to today. This is 9:30 in the morning, and today we had it was not necessarily gap down, but it did come down off yesterday's close, or yesterday's. I think yesterday's close was here at 248, and the overnight high was at 251. So these are these are the two dotted lines that represent that, and then this bottom dotted line is the overnight low or the morning low, and we started off in the morning with pretty positive, divergence on the bulls and bears, and DMI following through. It came down a little bit here, so he could have taken a shot and went long here, but this was the trade right here. As far as the first trade of the day, it was at the 9:45, 9:50 time frame, and you had the bulls and bears divergence, positive and negative divergence, with the ADX line following through.
What does ADX stand for?
I have no idea. I will find that out for you.
Okay.
Yes, I believe it's ADX. Anyway, I call it the trend line. The white is the trend line.
What does that mean when you call it the trend line?
It means the green is positive, so that's more bullish, and the red is negative, more bearish. And if the trend line is following through like it did this, then good chance of it staying that way, because the trend line is telling you that's it wants to stay with this green line. It's just saying more bulls are entering and instead of bears. Or
all right, if it's not we'll circle back on another time.
All right, or if it's not doing
of that.
Sure. And if it's not doing anything, if it's not trending at all, then it's down here. If it's trending, then it stays with the top line. Okay. Anyway, the first trade. So we have here 9:45. It was getting divergent. The trend line is following through, and you could have went long here. You could have gotten a 252 call at 9:45 or 10 o'clock. And let's look at that. The 252 call. At 9:45, 10 o'clock. It was right down here at $1.36, $1.50. $1.50. Okay. And then by 10:30, 10:45, it was at the 4.45 level, almost $5. So that was definitely the first trade. And you also saw here the trend line following through with this trade on the options chart. Do you see it?
I mean, I see what you're talking about, but I don't see any evidence that I would have put my money behind that. And
you don't see it on the chart as far as that time frame from 9:45 to like this divergence right here. This follow through with
that divergence was more at like 9:55, I would say.
Okay.
And I do see the divergence, and I do see that whatever that white line represents is like reflecting the same trajectory as
the trend line,
as the buyers. So the buyers stepped in. They are increasing in volume. That's the green line. That means the number of people buying shares of this stock is increasing in volume, and you can see the volume going up.
And also the over or the morning low was here at 242, 243. Okay, and it went there and started coming. The buyers stepped in at this point. So at this point, you could say, well, I'm going to go long. But the buyers stepped in. Yeah, there was a little selling going on, but buyers stepped in again before. And if you got in, so like I started my trend line from the 9:15 to the first 15-minute low. Okay, and that's where I drew my trend line. By the second time it touched that trend line, your line was already set, so it bounced off that.
So that's
and
it.
so
It's just
and
that second bounce that makes you believe
well,
it's not going
hold on.
back down.
Let me finish. So if you said, well, my long is here and my stop is here because the overnight didn't go lower than 243. You know what I'm saying? You're taking a chance that you're saying if this should keep going up following this trend line, and if it doesn't, it should bounce off down here where it had done earlier before. So so your stop would have been here. Your loss would have been minimal.
Well, if you apply that to an option, though, I mean, and not a direct, share of this SPY. If you apply that to an option, you still would have lost your option. I mean,
you wouldn't have hardly lost anything. I mean, if you put your stop here, you would have lost $20 or something like that. But you get the whole rest of the day. Really, you don't know if you made a bad trade, if it just broke this morning level and kept going down. That's when you know, all right, I'm obviously on the wrong side of the trade. But that was your stop. I'm saying where you're buying, and when you're saying where you're drawing the line and saying I'm not gonna. I don't think the price is going to go lower than the morning low.
Well, I think it's something worth mentioning that it's helpful to know what losses you can bear and know when you would get out if it doesn't do what you expect it to do. Know that at the moment you make your purchase, because
all right.
I mean, the only thing here that's really compelling in any way is that the buyers step in and the volume is increasing, and that they're moving.
Well, volume really didn't increase. You're not even looking at the volume.
Well, it's diverging.
I'm looking at the divergence of the buyers and sellers, bulls and the bears. Yes.
Right.
And I'm looking at the trend line, the white line, telling me that that's the way it. That's what it looks like it wants to go. That's what the math is telling me here, whatever the math that it works.
All right. Like I said, we have to learn more about that before we can keep using that as an example of anything.
All right, babe, this is the highlight show. So let's stick to the highlights of the day. Okay.
It's thrilling. Okay.
All right. Now, after that one, you could have taken a short, up here at the 252 level at 1045. However, it wasn't really, there was nothing telling you that that's what it was going to do. That it was just going to keep dropping. You see at this level,
right. You have no idea if that's a consolidation.
Right, the trend line topped out at 50. It started getting overbought, and the buyers stopped. There was less and less buyers, but there wasn't more sellers, and so the trend line and the buyers fell, but there isn't anything telling me to short at this level, except other than it hit the overnight high, and then so what happened from 10:45 to all the way to 1 o'clock? It went sideways action for how many hours? Just you could have taken a nap and then woke up. But so sideways action. There was no money to be made as far as the day trade goes. There was no money to be made from 10:45 to the 1 o'clock time frame because nothing. Sorry, folks. Because nothing was telling you that. This whole time frame here, nothing was saying short or long here. It was not trending at all. Total tug of war between the buyers and sellers.
I am following you.
Okay. Now at this time frame right here, this time frame was a little indicator of what might be happening. It started diverging here. It topped out, double top, triple top actually, and failed, and then fell below the trend line, And then so this gave you an indication of what might be to come. So this was this was the divergence here, and the trend line looked like it wanted to keep following through. It hit the 20, and I thought it was going to keep going. So that's where I entered one of my trades today.
On a call or a put?
On a put going down.
On a put going down.
Yes,
All right.
and my stop was right here at the 252. I bought it at the 251 area because I thought that's what it was going to do, and my stop loss would have been at the 252. I didn't think it was going to go higher than what it already previously done. How many times before? Okay.
All right. So what did you put your what price did you buy your put?
246. 246 put. So, but I just want to say, I was a little premature. I entered it because I saw the divergence. I saw the trend line following through, and I thought it was going to keep following through. So I sweated it out for a little while.
Sure.
Because it didn't go that way right away. All right. But here again, it happened again. So like this was just a little indicator of what was to follow, hopefully, perhaps, and for sure right here at 1 o'clock, it started diverging and the trend line started to climb. Sellers started coming in and the trend line followed that and saying, oh yeah, sellers are coming in. And I had it and I got the I entered my trade at when it broke this trend line. I entered it at 12:30, so I entered it here, and I had the 246, and I closed out here because it started. We topped out, and the trend and sellers stopped selling, and buyers kind of stepped in, but not really. So I sold here.
Excellent. I'm so glad you didn't go for the nail-biting bitter end.
This is the fib retracement from the highs of the last 2 weeks and the lows of the last 2 weeks. The fib retracement was the 61.8. I thought I had a feeling that it would come hit. I knew it would hit this, and I thought it would come down to this, but not after it had a little pull back.
But why take that risk? Let that be somebody who can afford more risk,
correct.
than you.
All right. So so mine was the 246 put.
All right.
At 12:30, I entered that put. At 12:30, I entered the put somewhere around here. Because it started going up. I thought just same thing it looks like,
So 246 put, 100 shares per put. You paid $246.
I paid I paid 225 actually. I think it was my entry point, 225. Right. I saw this pullback and I thought maybe, somewhere around here I said, let me buy in. Anyway, so I sweated it out till 1 o'clock until it definitely made that move. And then I sold it here at the what time frame was that? That time frame was right here at the 325. I sold it at 325 level.
325. So you made $100.
At 12:30, right? I made $100. Yes, and it came, and that's where it bought up and then kept following through. But I didn't do that trade, So anyway, so that was my trade, and let's see. The last trade of the day. All right, real quick, we got 1 minute. Last trade of the day was right here at 240, 215, 230 level. Well, actually, last trade of the day was right here when the divergent happened again, and you saw the minus and negative and the follow through with the trend line, and so you entered here with your stop loss down here where it had previously bounced. And you could have sold at the end of the day, or you could have sold at the end of the day, or before that. You were still making money at that point. And that was another 252, I believe. A 252 call. And that was right here at the 133. And you could have sold it for 366 at the end of the day, or sold it for $3 right here, right above $3. Right before the end of the day. So anyway, that's all we have time for. That is a quick 15 minutes. Wow, that went fast, hon. I had so much fun.
Yes, it was very exciting. I'm glad you got a profitable trade in, and I'm glad you didn't take it too far.
We will see what happens tomorrow. Good night, everyone. Thank you for watching, and be sure to make any comments or questions you have. I'll get back.